Good afternoon. Welcome. It's Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And although upon the surface, the markets appear a bit placid and not a lot going on, beneath that surface, there is quite a bit of activity. So we are going to jump right in. My goal here is to provide you with insights not only on what has happened during this week. Today is Friday, September 20th, but even more importantly, help prepare you for next week. So let's go ahead and get started. We'll be reviewing some of the items today that's on the agenda. Of course, initially, we'll go ahead and take a look at the current markets. You want to have a good, sound understanding of where the current markets are before you take action within those markets. And then we're going to take a look at sector and group rotation, and we did go ahead and cover that last week. There's still a little bit of jockeying going on behind the scenes that I want to make you aware of so you don't step in anything. And then from there, we are going to take a look. This is an activity that really I highlighted a couple of weeks ago, and it bears repeating this week and maybe even every week. And essentially what we are going to be doing is taking a look at today's action as far as looking at StockCharts.com, that initial page, and seeing those stocks that were up or down the most today. And a lot of the reasoning is that there is a good reason that they are highly active. We're going to look at those charts, and very, very often you will see a carryover of that given action into the beginning of the next week. So certainly bears taking a look at. There are some stocks that are due to report earnings this week. We're going to cover about 3 of them that are very impactful as far as their report subsequently potentially impacting other areas of the market. Of course, this week we did have Federal Express. FedEx came out. Their numbers were weak. Management guided lower. Big impact on the markets because, of course, they are a global delivery company. So it's that kind of phenomenon that we are going to be on the prowl for, potentially to take a look at what we may incur or may run into next week. So let's get started. And I talked about taking a look at the broader markets. We are looking at the S&P 500 index. This is a daily price chart. So each bar here represents 1 day of trading activity. And then, of course, I've overlaid a couple of nice technical indicators. This green line is your 10-day simple moving average. Notice when the markets are in an uptrend, I'm taking us back to that June and July nice bullish phase here. We can see that the index found support at that upward trending 10-day simple moving average. Of course, August was a very, very tough period for the broader markets, but going into September, we were beginning to see that nice uptrend, very similar to this June and July period, with the broader markets finding support at this upward trending 10-day simple moving average. And in fact, that is still the case. It's hard to tell, but the S&P did break or close the week above that nice 10-day simple moving average. So the uptrend remains in place despite a bit of a difficult period today. And of course, those of you that follow the headlines closely will know that Chinese trade war fears are back in the forefront, with China stepping back very, very unexpectedly from a meeting that was due to take place in Montana. So let's go ahead and look at some of these other overlays. On top here, we have what is called an RSI. This is a relative strength indicator. Again, I'm going to take us back. You want to see the characteristics during that nice bullish phase to see, are in fact we experiencing a similar phenomenon? And we are. The RSI is up here above that 50, trending upward and in good fashion. Down below, another momentum indicator. This is called stochastics, and you want to pay attention to 2 phenomena with this. One is that black line crossing either above or below the red. That is a signal. But also equally important is the position of the stochastics. So let's go back here again to this June-July bullish period in the S&P 500. Your first initial positive signal was the stochastics heading upward. But as it breaks above this 50, which is neutral, that is even more bullish. So we are retaining a bullish phase until we see a break back down below that 50 during that August period. So take a look at the stochastics here. We are above that 50. We are a little bit above that 80, indicating that it is a bit overbought, but we are still in good standing. So overall, the markets are flashing bullishly, uptrend still firmly in place. But of course, when we hear those trade war fear, those three words can certainly put the pause button in place. So now we have a feel for the broader markets. Let's go ahead and drill down beyond that, because all of this is very interesting, good information, but where are we seeing the most strength, the most weakness, so that you can assess and determine where to put your research efforts toward to uncover candidates that could then benefit from this bullish period. So what we are going to do initially is take a look at the candle glance. This is a really great feature. I'm going to be using it a fair amount today. It's accessible from StockCharts.com on that first page. And what you can do is put up to 12 either ticker symbols. In this case, they are all ticker symbols. I am looking at some of the other broader market indices, the NASDAQ, the Russell, the Dow, and then also populated it with some other very, very key important indexes that you should have on your watch list. Gold is one, as the markets, GLD is here, as the markets get into periods of uncertainty, there is and can be a tendency to move toward gold. Oil, now oil stocks have really been in the forefront with the energy stocks. Of course, we had that big scare at the beginning of the week where there were attacks in the Middle East. But beyond that, keeping an eye on oil can be really quite helpful. UPP is the dollar. And then also we have the Treasury. So what I've done from here is we're looking at a 2-month snapshot. I've gone ahead and added what's called the RSI. We looked at that earlier. That's your relative strength indicator. So I want to see where is the relative strength among these major broader market indices, as well as the VIX is the volatility or fear index. So where are we seeing a lot of relative outperformance versus weakness, and then sorting it in descending order. I'm going to go ahead and update it. And this is the beauty of doing this on the close Friday. You can do it now, you can do it Sunday evening, but really quickly gives you a wonderful snapshot of the action, not just last week. This is a 2-month view, but it is bearing last week's action in this view. So what we can see here is the Russell 2000 index up here in the forefront, and these are those smaller cap stocks, and smaller cap stocks have really come into favor this month, and this is bullish as far as the prospects for the broader markets. A move into small caps generally implies a confidence in the US economy and in the broader markets, but there is one other caveat to be aware of. The Russell 2000 is 2,000 stocks, of course, but among that, there are industry groups that are heavier weighted. And for the Russell 2000, there are financials. We're going to take a look at how they're doing. Over 25% of the stocks here are financials, and then industrials are a big major component. Just something to keep in the back of your mind. But again, overall bullish on the Russell 2000, which is constructive. The next best as on a relative performance is the S&P 500. We, of course, did a wonderful review there, bullish. And then take a look here. This is IBB Biotechs. And biotechs have really been coming to life, and that's in line since the beginning of September with these small cap stocks. So this is really quite bullish, and we're going to be taking a look at drilling down beyond this index within biotechs, because we can see that nice break up above that red line, and that is going to be, let's take a better look and hopefully we can get back to this. But we can see that it has broken up above this 50-day simple moving average. We're not quite out of the woods yet with biotechs. We needed to see this index break up above this blue 200-day simple moving average to get really bullish on this index. But we're going to take a look at some of the stocks within it that are really perking up and looking quite attractive. A move into biotech stocks is bullish for the broader markets because this is an area that is super volatile. Not a lot of these stocks have earnings. Money flows into this implies, again, a confidence in the markets. So we have the dollar, oil, of course, we talked about that spike on that, it was the Middle East problems. And then the industrials, Dow Jones Industrials, kind of middling here. They did suffer quite a bit more today on trade war fears, but we are going to drill down more into the Dow. There's some really interesting stocks I want to share with you there. And gold, take a look. Gold, as the broader markets, small caps and other areas picked up here in September, that took the shine off of gold stocks because the markets were starting to stabilize and do better. So gold stocks pulled back, but take a look today up 1% because trade war fears are starting to resurface. So this could be an interesting spot or place for you to do some work over the weekend and find some candidates should we see continued trade war fears. Now we have the TNX is the yield on the 10-year, and this spiked last week. It had been traveling around down below that 1.5 level, and it spiked up above almost to 1.9 for that 10-year. Big move here. This impacted, for those of you, I do have MEM biweekly Edge report that is accessible at MEM Investment Research. Super powerful research letter that talks about when we see these kind of phenoms, what types of groups are going to be impacted and which types of stocks you should be paying attention to. And that's true for everything that we've been reviewing today. My newsletter really gets much more into detail, but also it provides individual specific stocks that can benefit from this rotation that we're seeing. So as we move down, we can see the NASDAQ getting hit, some of these tech stocks on the trade war. Transports had a great week last week, but pulling back. This is all about Federal Express, and it did spread throughout. And that's what I talked about, paying attention to those earnings, because there are going to be areas that are you'll see a spread out beyond that individual stock into other areas. So let's take a look at the S&P 500 sectors, another candle glance view. So I've populated it with those 11 sectors, same phenom with the RSI descending order. So take a look here. What we see quite simply is a move continued into utility stocks. And these utility stocks are very defensive. They also have on average a 3.3% yield, and you can find individual stocks that yield even more. So this has been an area, we have several stocks on that MEM Edge report that are continuing to outperform the markets, look bullish, give you that nice yield, as well as a peace of mind. Energy had that move. We talked earlier, the explosion. This is an area that's not quite ready for prime time yet, but again, with my newsletters, you will be alerted to when it is, because there are actually a couple of stocks among energy that are picking up and beginning to look somewhat interesting. Healthcare has been languishing, but is picking up. That's an area where there are bright spots that we've been able to uncover and capitalize on. In fact, one of the best performers today in healthcare is on the MEM Edge suggested holdings list. So I would love to share that with you. If you subscribe, you can take advantage of a trial period for a very nominal fee. You can take a look at that report for 4 weeks. So go ahead over to MEM Investment Research, and I urge you to take a look at that. But moving on with today and the sectors, this is the industrials. Again, a lot of this is going to be related to the transportation stocks that are pulling back. But that said, there is a wonderful bright spot among here and hopefully we'll have time to get into that. It's not all industrials that are getting hit. And so what I'm going to do is just take us down over here to the weakest grouping so we can move on to other aspects of today's show. And so what we can see is consumer discretionary stocks. And this is going to be primarily your retailer. Today, getting hit quite hard are those apparel related stocks. And this is all about trade war fears. So we are seeing recently XLY discretionaries did hit a new high, but getting hit today. So that's your nice, wonderful overview to help you get a feel for where the strength is versus the weakness. Let's go ahead and move on because there are some shortcuts that I want to share with you so you can get in front of names. And this is going to be not only for shorter term traders, some of the items that I'm going to be sharing with you now, but oftentimes what I'm going to be looking at are what are called market movers. These are stocks that are either the most active, they can be up percent-wise the most, or down on the day. Oops, let's go ahead and get back over to that area. And what we are going to be looking at are some phenoms that are occurring within the market. So you can do this, the top 10, on the NASDAQ, the S&P, as well as the Dow. And then for those of you, this is Toronto and London. But what I am taking us to first is the NASDAQ. And so let's take a look because I found this interesting. I did want to share it with you. Quite simply, the most active. I'm not asking 4% up or down. These are your big volume movers. And surprisingly, most of them are down on the day. This is a daily view. So what I wanted to show with you within that is the fact that Roku, you can hover over that ticker and get a nice thumbnail shot. Take a look at this swift deterioration in Roku, and then we can drill down even further, take a look at Netflix. So this was an area, something that I did want to share with you, the fact that these high-flying, formerly high-flying, this is Roku, Netflix, they are starting to come in with competition elsewhere. So we are seeing deterioration in some of those better known names. Facebook is going to begin streaming. Of course, we have Amazon already doing such. Disney is going to be launching this fall. So Netflix, this is a drop based on earnings back at the end of July. The stock has been in a very, very confirmed downtrend. And in fact, as long as we're here, why don't we take a minute? Because this could be a really great lesson. Oftentimes, many people, shows, articles, they're always going to be sharing with you what looks good, where you can get in. I argue it is equally and even more important to know when it's time to exit. So let's just use Netflix. This is a little sidebar here as an example. So we're taking us back to this end of July, going into the release of their earnings. And this was a tough period in the markets, but the stock broke below. I have those same simple moving averages. It broke below this 10-day simple moving average. Let's just go down and eyeball it because it did so on big volume. This is called distribution. It doesn't mean to sell immediately, but it is certainly a red flag. And so when you see this break below what was once support, it's now breaking below that. And you can marry that with other characteristics. Let's take this trade or this stock action a bit further. Stock gaps down huge on big volume on their earnings. Oftentimes, again, further distribution is ahead. So once you break below that red 50-day simple moving average and then the 200, which is your blue simple moving average, all bets are off. From my work, just a break below the 50 would get me out. The 200, absolutely for sure, particularly when you see this volume. And then that RSI breaks down below that 50, heads south. Your moving average, convergence, divergence, has that red black line below the red, your first signal, then it dips below zero. So now we have 4 different signals that are telling us it's time to exit. But from here, a lot of other action is taking place. The shorter term moving average down below the longer, that's your death cross and so on. So all of these, for those of you, I have lots of great courses that'll take you further, but I really wanted to take that sidebar moment to share that with you. Let's go ahead and drill back to the action list, if you will, for lack of a better word, on StockCharts.com initial interface page. And we're going to go ahead and take a look at some other areas where we saw some action this today, because this is looking at a daily. So let's go ahead and move over to the Dow, because I talked about the Dow struggling today, but what I want to look at is, again, the most active. This is really going to be important because these are the names that are moving either up or down, but it's on volume, and that volume is telling you that institutions are in there either buying or selling that stock. And oftentimes, this can be a really powerful screen at the end of the week. Show me all stocks that were either up or down on volume, because it can really be a trigger into what may be going on beyond. And then one other area that we can just take a quick look at, quite simply, is percent up. So let's take a look at percent up first. And I want to share with you some of the names that are showing up on here, because this is the Dow, 30 stocks in there. These are going to be your highly liquid, better known names. So very first name, let's take a quick look. Actually, I want to go over to this, what's called Candle Glance. So it really quite simply is going to give me thumbnail shots of those 12 stocks that are active or up today. And quite simply, I can tell you Cisco is not going to be of interest to me. Your moving averages are still trending downward. It's below that 50-day. CVX, this is one of those energy names I talked about that's perking up. So when energy stocks come back into play, that would be a potential candidate. But what I want to show you is Merck. Let's take a quick look, because Merck's activity today, we can see it occurred on volume. It broke up above those simple moving averages. So I've gone ahead and done the work as far as uncovering why. You'll want to know why, because is the reason for this gap up on volume something that could sustain a continued upward move in Merck? And in fact, today's news was quite bullish. The FDA did approve a uterine cancer treatment drug. Merck is joining forces with a Japanese pharmaceutical company, and this is very good news. The stock has a positive RSI, MACD poised to turn upward. Analysts are raising estimates on the news. Let's take a look at some of the other potential movers here. There was another stock that looked interesting after breaking up above these simple moving averages, Johnson & Johnson. But I will tell you, it is starting to potentially form a base, but it definitely still has work to do. I would need to see this stock break up above that 200-day simple moving average before I would become interested in it. But we do have an RSI and a MACD just poised to turn positive. The news with Johnson & Johnson is analysts upgrading on anticipated strong Q3 earnings. There are headwinds here, though. They are in lawsuits, Johnson & Johnson, with their talcum powder, as well as opioid. But analysts feel that a lot of that, or some of that, is behind them. So keep an eye on this one. Not ready for prime time quite yet. Two other names I really did want to share with you before leaving this. And the first one is Verizon. Take a look. Now the stock, look at that gap up, huge volume, poised to break out of this 2-week base. RSI and your MACD are positive in a very confirmed uptrend. Verizon, this is all about analyst upgrades. 5G is starting to come into the forefront again as far as capturing investors' interest. Those companies that are heavily involved, Verizon is one of them. 4.1% yield on the stock. And then the last one that we're going to take a look at here that I wanted to share with you, let's go back over to StockCharts.com, take a look at the Dow, and take a look at, in fact, the most actives, because that can be really quite telling. I'm going to apologize. This stock did not show up on the list, but looking at Verizon, it kind of drew my eye over to another very strong stock in that telecom space. This is AT&T, 5.5% yield, undercut that 10-day, but is now breaking back up above it. All the while, your RSI remained positive, as did your MACD. This is all about renewable energy. The company, AT&T, is now the largest corporate purchaser of renewable energy, and that really has been a bright spot. Analysts are revising estimates of this is SPWR, SunPower, one of the bigger players in the alternative or solar energy space. They're finally getting to a period of parity where the government subsidies, in fact, may no longer be needed. This is a gorgeous chart. Take a look at this gap up on earnings, pulled back to the 50-day, poised to break out. So some really interesting things going on in the markets. Let's take a quick peek at two companies. I have four, but we're only going to be covering two that are due to report their earnings next week, because I talked about FedEx, the impact, the real big deterioration, gap down, and how that did impact transports. Let's take a look at a big consumer name that's due to report next week, and that's Nike, NKE. We can see the stock dip today on those trade war fears. Should the company come out with numbers that are not above estimates or are not attractive by analyst standards, we could see, again, a spread to other areas. That's just the kind of stock that this is. And we can go back to their last earnings report and see, again, it can be really quite impactful. One other name is MU. That's Micron. This company, I'll tell you, they really are impactful as far as depending on their results. So too goes the rest of the semiconductors. So what I'm taking you back to here, this is the release of their last report. Take a look at that gap up, huge volume, and it was the precursor to a nice subsequent move. So we are really going to want to keep an eye on that one, because taking us back, we can see this is that June into July. Let's take a quick look at the semiconductor index, and you will see parity as far as the impact that that earnings report had on these semiconductors as a move. So those are two areas to keep in mind. And a couple of other things that I did want to share with you is paying attention to the economic calendar. And I did want to let you know that there's going to be a GDP revision on Thursday. This could impact analysts and investors' thoughts as far as interest rates. Should the economy be heating up a little bit more than anticipated, you will see an impact. And some of the other consumer-related areas that are going to be reporting on Friday: personal income, consumer spending, consumer sentiment. So all of that is going to tie in with consumer confidence on Tuesday, all about the consumer. So we can go into consumer discretionary sector. And I did want to point out to you that home construction stocks really are continuing to hold in quite well, while these other China-facing consumer discretionary stocks are getting hit. Let's take a look at one other sector that I did want to share with you. And I talked about these industrials, and this is intraday. Let's take a look at the weekly view, and there are some bright spots among, even though this is FedEx and some of these transportation related stocks are getting hit, there are still some bright spots among those. And I believe I have time to share with you one last area that you might want to take a look at. And oftentimes I'm going to be looking outside of the US and looking for potential candidates and areas where you can potentially search. This is India. Big gap up. INDA is the ETF ticker symbol. I wouldn't tell you it's quite ready yet. I would need to see a break above it, but they are doing work with corporate tax cuts. RSI, MACD are bullish. So if you want to search for ADRs within that area, that might be interesting. I'm going to leave it at that. Everyone have a great weekend. Hope to see you here next week.